Let's bring in KraneShares Chief Investment Officer Brendan Ahern. Brendan, want to get to the decoupling part, but first let's talk broadly about the Chinese economy and markets. So the Central Bank of China, PBOC, over the past day cut deposit rates. There's a speculation that they're going to be required. Banks will be required to hold fewer reserves. All that could open up lending, goose the real estate market. What does that mean at this particular moment?
Yeah, John, we've seen a bit of a slowdown in the economic rebound from some of the data in April and May. And I think, first and foremost, investors are getting a little anxious, a bit impatient. So we're seeing some policy response from the Chinese government, who otherwise have been willing to allow the economy come back incrementally, that, Q1 is better than Q4, Q2 better than Q1. But again, I think investors are getting a little anxious, and we're seeing some property support. And as you rightly mentioned, a cut in the deposit interest rate.
And so this decoupling that we've seen happen, this separation between U.S. interest and Chinese interest, as the economies come under more pressure, does that process accelerate? Or is there more incentive for the U.S. and China to stick together?
Well, certainly these economies are highly intertwined, and I think certainly decoupling is that train's already left the town. It's far too big of an economic repercussion for many great U.S. multinationals, if it's Apple, Nike, Starbucks, Boeing, ExxonMobil, et cetera, et cetera. So hopefully you're seeing, a part of the rally today that you saw on KWeb today was really driven by Secretary of State Blinken rumors that he's going to be planning his trip back to China. And we've seen some lower level meetings between U.S. and China. So you're seeing an improvement in the diplomatic relationship, a little bit of a thaw.
Well, that's what I mean, is because it seems like there is that incentive when economies slow. You feel like maybe it's not so great to try to go it alone at this point. But then you see moves like Sequoia's making. We've seen Apple hedge its bets more with manufacturing in India. Are there still real risks for companies that have multi-nation exposure, particularly if you're a U.S. company in China or vice versa?
Well, I think you're going to see U.S. multinationals, global multinationals, create a China plus one strategy. They're not going to walk away from the second largest economy. It's not just about manufacturing in China. It's about selling in China, as well as transporting goods across Asia. 4 billion people in total, and that's why a lot of the factories are over there. There's 4 billion people there versus 400 million here. I think politically, you're seeing a little bit of a thaw because certainly these economies are so intertwined. The Biden administration has articulated the idea of a small yard with a high fence around critical technologies, and that is going to have an effect on private equity.
Brendan, what is the AI effect when it comes to China? There's a lot of advanced process silicon manufacturing that doesn't happen in China because companies don't want it stolen. And then there's the possibility that China won't get access to those most powerful chips that are necessary for AI. How does that play into what investors have to consider as they look at these geopolitical tensions?
Well, certainly you're seeing a bit of an AI frenzy in U.S. equities, and we'd love to see that play out for some of the companies that we own within KWeb that do have a high orientation to AI. Companies like Baidu and Alibaba and Tencent are incorporating big data, Chat GPT, particularly Baidu with their Ernie bot. But you're not seeing that enthusiasm on the China side. I think, generally speaking, you're going to have low-level access to semiconductors. Things like Texas Instruments and others, they provide the chip that goes into your toaster. There's no problem with that. Certainly, there is going to be recognition and awareness about very, very high-end chips that potentially could go into a military purpose. And that makes sense that it should be manufactured here in the United States. So then you're going to see a bifurcation within semiconductors between the elite chips versus the mass market chips.